Right, hello everyone. This week's hangout. It's been a much more enjoyable week this week. So we've had months of not very much going on, and then the Trump election has finally got things moving. We said very importantly that we didn't want anyone to have any positions, new positions ahead of the election. And when we look at some charts afterwards, you can see exactly why. If you had some short positions, you might have been sitting there at one point when the Dow was implied to be 800 points down, and actually by the time the market, the cash market actually opened, I think it was only about 50 or 60 down. So you could have been sitting there thinking, making a lot of money, and then by the time you got to it, it all disappeared. For the people who've subscribed, who've joined the program, as opposed to people who are just thinking about it and watching it, those people who have subscribed, and I've put them on the professional commentary just for a while. And the idea of this is that they get an idea of the overall market direction. So I'm commentating on indexes, foreign exchange, bonds, commodities, anything that, as far as I'm concerned, is interesting or is moving. But it gives some sort of background of where we are. And I'm just going to show a couple of the professional charts to start off with, to give you an idea of what they're looking at. Then we're going to look at what's some signals that have come up this week, and I'm also going to show you how I look at one piece of fundamental information, and this is to do with what I call pass the parcel, and what the professional market, pretending to be intelligent, calls sector rotation. And there's one specific thing that I'm interested in. I spent 3 years doing a huge amount of work on testing fundamental information and looking at fundamental information to see whether there was any pattern there. I came to the conclusion that I thought was probably the conclusion I came to at the beginning, which was, no, there isn't a pattern, and it's completely and utterly random. But thankfully I did find one thing that's extremely useful, and I'm going to share that with you today. So let's get on. I'm going to share my screen. And this is a CQG chart. So this is what everybody in the professional world, most of my customers, are looking at. I'm just going to share just a couple of quick things with you. The first thing is, this is the S&P 500 futures, and it's a daily chart. Price came crashing down in the middle of the night. I've just drawn a circle there, and we've got this little line, and that's calls itself POC annual. In the Trading Safely software through Technician, it's called Gravity, so it has a different name. And what this line is the point of most time in the last year. So that's why it says annual. So what it means is, this is the place where the most amount of time trading has occurred in the last year. This is very, very important to me, because time and price and the amount of time you spend somewhere, whether it's a great deal or hardly anything, is very important to me. So it's a major support point. We can see that just ahead of the election, we have this blue line, which is the same as what you'd see in Technician, and that's a major support point. So we stopped ahead of the election on the Friday, so we didn't know, and then away we go. So a major support point there. Next one I'm going to show you is the Nasdaq, and this is where it's very important that you didn't have positions before, because what's happened is certain parts of the market have been very strong, and other parts of the market have actually been very weak. And so if you weren't in the right areas, then you could have been losing both ways. If you're in the right areas, you could have been making both ways as well. But we didn't know who was going to win, so no point in taking those risks. This is the Nasdaq. I'm just drawing this circle here, and this is the monthly support. So exactly the same as what we saw on the S&P. We went a little bit below it, and then we bounced off it rapidly. But then since then, the last couple of days, we haven't actually done very well. And the reason for that is what's called FANG, which is Facebook, Amazon, Netflix, and Google leaders in the Nasdaq, very, very big stocks. And if I quickly show you what they've actually been doing, this is Amazon, very weak on Thursday. Got a big support point down at around 697, but obviously not done very well. Gapped low on its results. Next change. Google. Again, actually, what was monthly support became monthly resistance. We've dropped rapidly. Netflix hasn't done too much, so not too interested in that one. But Facebook has also fallen very steeply. Now, if we're looking for that contrast, we can look at the Dow Jones. So we can see that the Nasdaq has actually been pretty poor the last few days. And there we have the Dow Jones actually making new all-time highs. And we had a buy signal earlier on in the week. Now going to go into technician. And this is the same chart. And we have the blue triangles underneath price. And there's two of them, 2 days running, so actually just before the election and then afterwards, and we've accelerated higher. And the reason why the Dow is doing so well is industrial stocks are doing well. The idea is that Trump is going to spend money on infrastructure, he's going to lower taxes for corporations, and that might take him quite a long time to actually physically do that. And so that's got the industrials going. So this is what we talk about in terms of sector rotation. I'm going to move on and look at some of the charts, the signals that have come up during the week. And the first one is XLP. Seems to be thinking about it. Okay, I'll just type it in. It should be better. Right. So we have XLP, which is consumer staples. Now this was a position that Gilby had, one of our apprentices, and it sort of did not very much, went lower. Then we've had a whole series of sell signals, and he had an opportunity to put that position back on if he wished. And on Thursday, price collapsed, did really, really poorly. So this is an example of sector rotation. What is fashionable, what is unfashionable, and consumer staples is unfashionable all of a sudden. If we look at the time area below, we are actually coming down towards a major support point, which is 50.49. And on an intraday basis, and by that I mean during the day, we actually hit that target. So the low of the day was below there. So if he would already been short, then that annual support would say, okay, maybe I want to take a little bit off the table and take some profit. If we look in contrast about this idea of sector rotation, this is Signature Bank, which is also a position that Gilby was in previously. We had a sell signal, which had taken it down. It had come down to its support point. We've got a number one there. So it's to take profits, rotate it back up again, another sell, and then another buy. And then another buy on Wednesday. So once we knew what the information was, the perception is that banks will benefit from Trump. Not 100% sure why. Maybe because interest rates are probably going to go higher. And so banks benefit from higher interest rates, makes a big difference to their profitability. And so banks have performed very well this week. In theory, you could have already been long if you wanted to take it through the election, but then we've had a major breakout on Wednesday, and price has just exploded higher. So it's moved another 10-12%. And on the time area study, where we understand whether there's any other levels of profit taking points that we might be interested in, the top study is showing 138.57, and we've already actually reached that point. But after that, there's absolutely nothing until all the way up till 147. So we get an idea of where price can go, and if we get a signal or one of the bullwhips or bear cages, slam dunks, time continuation, UFO, if they appear at that resistance point up at 147, it's going to produce a number, and it's going to say, okay, take some money off this one. So I think it's shown there that at the same time, there's the ability to be long a stock and it goes up, and you can also be short at the same time and that one goes down. So this idea of being in the correct sectors is extremely important, because you have the opportunity to actually make both ways. Your sell signals could be making money, and your buy signals could be making money. And this is what's happening at the moment. Other ones that are on our hit list, ones that I'm watching, SYY. It had its results, so it gapped higher, happened to be results as well, and then it's come all the way up into what is a major resistance area. So the blue line is monthly, then we have 2 weekly lines, and it's just stopped it stone cold dead. Yeah. So the price was trading at 45s, jumped to 54, and then bang, yeah, can't go any further. Now, one of the reasons, or the subscribers haven't actually put this position on yet, they're actually waiting to see its performance. Yeah. So what I'm really interested in is the results were good and the price jumped. Is to say, is it going to do the opposite to what the market's doing? And so far, to a certain extent, it's doing that. So what I really want to see is the market have an up day and the stock have a down day. And they say, right, it's lost its, it had some irrational exuberance on its numbers, and now it's sort of finished all of that, and has no further impetus. So that's something that you can watch for. So our subscribers are keeping an eye on that one and see whether they're going to get short. Next one is IR. And this is also broken out, and it broke out before the election. So there was a buy signal in here, then we take out the resistance, and it's just accelerating higher. What our subscribers are looking for there is, if they haven't got a position, which I assume none of them have, is whether we get some sort of pullback and they might get an opportunity. But it's an example of an stock that's just having gone sideways and done very little for a long time. It suddenly has the impetus that it needs. Now, the other thing you can do, actually I'm just going to finish going through the American ones, then I'm going to talk about how you can connect commodity prices with stocks in certain instances. So I analyze crude oil a great deal, copper, gold, and then from what they're doing, I can understand what certain stocks are going to be doing. Well, we move on to the next one, which is DIN, buy signal after the election. And the reason why the apprentices have not got involved is, as you can see, we're coming into the final resistance. So that black line is there. Price so far has popped above it, but it can't close above it. So they're waiting for it to break that level on a closing basis, and then they can say, right, fine, going to get long. The reason why you would want to get long is there's plenty of space in the studies. The nearest resistance on the monthly is all the way up at 96. So it's very important when we're looking at signals whether there is space to move. We don't want to buy something when it's coming into a resistance area. You don't want to sell something when it's coming into a support area. I like to see lots of room and space, and this is an example of a stock that does. So that's on their watch list. The next one is MAR, so Marriott. Now this has been a little bit wild in the last year or so. They merged with Starwood, so that's like Sheraton W. And so it's been a little bit all over the place. And this is very similar to SYY. So there was a buy ahead of the election, didn't really do very much. You wouldn't have held the position through that. We've rallied strongly. And now we stop stone dead. So it's a very, very similar chart. Are hotels going to do well under Trump? I don't know. I don't really care either. But it's one that's looking to watch it. And we're also very close to the annual resistance on the time area 1 study. So that's at 74.40, which is in exactly the same place. So I'm very interested in getting the final resistance or support based on the time area studies, which would normally be a yearly value, isn't always. And if that connects with our resistance lines and support lines, which are built based on peak expansion and peak energy, then that's a very powerful area. So it doesn't surprise me that we've stopped, at the very least. The question now is if it's powerful enough to send us rotating back down, and you'd look at it go all the way back down to where it started, into the 67, 66 area. Now there is a trade that has been done this week, or there's 2 trades that subscribers should have put on. No, Gilby, our apprentice, has done it. And this is another old favourite of Gilby's, which is United Utilities, UU.XLON. And he'd been involved a few times. And on Thursday, major sell signal broke through final support with ease. And the note that I put out to people was it was a very big range day, and the time area studies have completely broken down, so there is no support. So you go, right, this stock could fall a long way if it wishes to. But if I want to get really good trade location, instead of just selling it on the opening the following day, I know where price broke down at, which was at £8.90. So that's where that black line is there, the support. And so I said, okay, if you want to get involved in this stock, the ideal place to sell it is just ahead of that line at about £8.88, which means your risk is lower. Your protection line is at 9.27. So you've got a much better entry point. Instead of getting involved in around £8.70, you got involved in £8.88. Better price location means more volume if you're keeping the risk the same. Or if you wanted to cut your risk, then you could say, I'm going to do the same amount of volume as if I'd done it on 8.70 as well. I'm going to do it at 8.88. And what's nice about that is it's come up to that price and stopped and come back down again. So keeping an eye on that one. And some people are involved in that. They're also involved in another UK stock, which is people who are familiar with JD Sports in England. Not a very popular guy. Owns Newcastle United, but unfortunately he's a Cockney, so I don't really like him very much. And he doesn't like spending any money on players either. And they run sports shops, big chain of sports shops in the UK. A lot of bad press, been in front of the Parliamentary Ethics Committee for underpaying staff on 0 hours contracts, and lots of bad publicity associated with how they treat their workers. Hasn't stopped the share price, didn't affect the share price at all really when shooting up. But what's happened, and the reason why the subscribers have taken a short position here, is the weekly resistance signaled a breakout, and then a few weeks ago that line moved to the top. So what was support went to resistance. We've come back to that level, and then we've received a sell signal on Thursday. The risk, let's see the difficulty, it's about I think it's about one, it's just at this line here, so it's at 16.54. They put a short position on, and what they're looking for, it first port of call would be around 13.50 from selling it at around £15.80. So there's a decent there's a bit decent amount of room there for it to fall back down to its original breakout point, and then we'll see from there. So there's the signals that have come through during the week, and so when we talked in previous weeks about not having too many positions, don't like people to have too many, and because we've had a busy week, then there was actually 5 or 6 there that are potentially actionable. I would expect more signals to come in next week, and so it's important that people understand how many positions am I comfortable with, how many do I want to have, the ones that suit me more than others, because we do expect signals to come through fairly actively next week, and we don't want people to have too many positions. Now I'm going to move on to something to do with the one thing I look at fundamentally. This is a stock called ODP, so Office Depot Supplies, I think, whatever, doesn't matter. And because we just started with subscribers, couldn't take this position. As we move forward, and as I'm going to show you, whenever anything sets itself up like this, I don't really care about the election. I don't care about anything. Pretty sure that whatever happens, doesn't matter, this stock is going to rally. And if it was something in the opposite setup, it's something that's going to fall. Now, there was a buy signal last week, the week before. You can see a number 5, but there's also a blue triangle there. And that was on their results. And the stock went up 15% on their results, and you would assume their results were good, or their results were better than expected. Well, you couldn't be further wrong. The results were worse than expected by quite a bit. They missed on earnings per share, they missed on this, they missed on that. It was pretty grim. And what happens? Share price goes up by 15%. I spoke before and previously about the whole randomness of what price action does in relationship to company results, and this is a classic example of it. So why would I want to buy it if its results were worse than expected? Well, 2 things really. The first thing is what I call bad news, good action. Yeah. So terrible news and stock price goes up. Well, it's done the opposite of what everyone thinks it is, which is positive. And obviously we have the other way around. So if I get good news and stock goes down, so good news, bad action, then again, I'm very, very interested. Now, the other thing, I'm going to then show you a piece of software here. Let me just share it with you. All right. This is what's called MarketSmith. You can take a trial of it. It costs you about $20 for a couple of weeks. You don't need to do that. I do all the work for you. I pay the full subscription. But if you want to do it out of interest, then feel free. There's a huge amount of fundamental information in here. You can do all sorts of things. They have growth lists, tracking lists, all sorts of things. I spent 2.5 years on this, and I can tell you now, it's completely random. There is no rhyme and reason between what happens on fundamentals or measurements of fundamentals in relationship to what the price is going to do. Now, this is part of the new book. I'm nearly finished, pretty much finished. And this is an example. Zacks has got some software which enables you to compare all sorts of fundamental information and build back tests and lists and try and find whether there's any sort of rhythm or pattern or something that can build around all these statistics associated with the stock. And I'm just going to scroll through just to show you the fairly hellish 2.5 years I had to go through a lot of this stuff. And so there's literally, there must be 200 different measurements at least. And I couldn't find anything. Not surprisingly, I didn't really expect to find anything. I suppose I had to go through the process of proving that to myself. Thankfully, it wasn't completely a pointless exercise, in that I did find one thing. And what that is, as I mentioned earlier, pass the parcel, or professionals call sector rotation. And there is one thing in MarketSmith which is superb, and it's called the industry groups. And they split the groups into 197 groups, which is more than what the normal market actually looks at, but that's fine, it doesn't really matter. And then it tells you, it might be a little bit difficult for you to see on a small screen, but it then tells you where it is in that 197 this week, where it was last week, where it was 3 months ago, where it was 6 months ago. And at the moment, the one that's at the bottom is retail wholesale office supplies. And if I click on the code, it's going to come up with that chart. And if I just scroll over here, it's going to tell me who's in that group. Well, there's actually only 3 stocks, of which one is ODP, Office Depot. So this is the most unloved sector in the whole market, and it has been the most unloved sector in the whole market for at least 3 months. Yeah? Nobody likes this at all. Just scrolling down a little bit, we've got mining, gold and silver, and it's now languishing at number 189. Last week it was number 73, so it collapsed just in a week. And 3 months ago, and I can tell you now, just a month ago, it was number 1. So, and 6 months before that, it was number 193. So, this whole idea, things can rotate around. And what I'm interested in is buying stocks that are in the bottom 10 sectors and selling ones that are in the top. I've been watching this for 2.5 years now, and I can pretty much guarantee, and I know that every stock that's been in the number 1 sector and has been the number 1 stock in the number 1 sector at some point rotates back down again. Has the fundamentals changed of that stock or that company? Probably not. It doesn't matter. It just goes out of fashion. Everyone gets long it, holds it. Oh yeah. Somebody says something, a few banks say, oh no, we're getting out of consumer staples, because consumer staples about 6-7 months ago was number 1. So Campbell's soup was number 1 of the number 1 sector. It gone up 50%. Are we all buying 50% more soup? Well, no, of course not. And then the stocks come all the way back down again, and we'll probably have a look at that in other weeks. So, retail office supplies, unloved. ODP is within that, and if I now type in ODP, it's just one other piece of information, possibly 2, that I'm interested in. And what that is just over here. It's probably a little bit difficult to see. There's just a way of me understanding what the value of the share price is in relationship to itself. And what I'm doing there is looking at the PE ratio, which is price to earnings. That can be manipulated in a multitude of ways. So when I first started trading in the early 80s, I always remember that they said anything that had a PE ratio over 25 was expensive. Well, Tesla's trading at a PE of a few thousand, I suppose. Even Facebook is probably trading in the hundreds. All those things have gone completely out the window. PE ratios as a number means absolutely nothing. A PE ratio in relationship to itself does mean something. And so what it gives here is the 5-year range of the price earnings. And that's actually very useful to me, because it says the lowest it's been is 7 and the highest it's been is 146. So a pretty crazy number on the upside. And it's currently sitting at 10. Now, the low in this share has been down at $1 back in 2009, and now we were trading at 3. So tells me that actually the PE ratio, don't want to get too complicated, PE ratio is actually outperforming where it was back in 2009. Yeah, don't worry about that too much. So it's near the bottom end of its range in relationship to itself. It's unloved, and at some point, I know that we're going to get a buy signal. And the thing that really sets ourselves up is to do with these time area studies. If you look at both of them, the yellow, which is annual, brown semi-annual, purple, which is quarterly, have been stepping down. And then what happens is everything is just sitting at the bottom. And the crucial point is just in the last month or so is where that red line has moved to the bottom of price. So the day before the results, I don't know, people got out, they got, oh, I can't take another set of bad news. The last time, 6 months ago, the results came out, the price halved. Actually, that wasn't results, it was because they were going to try and buy staples for someone else in the group, and they didn't. And basically what's happened is suddenly support is moving underneath. So those red lines are now underneath price, as is the brown. We've got bad news, good action, and there's lots of space. And I don't think it mattered what the election was going to do. This stock was going up. So it's now already gone from 350 to 425. So it's moved 20% since the results. Where can we go to? Well, $5, $5.51, $5.64. So when looking at that price, so well, this stock could rally a good 40–50%. So this is an example of looking at sectors that are loved and unloved, and then waiting for a signal to appear. I'm going to switch this around, just in MarketSmith, and show you what's number one. Well, number one is energy and coal. 6 months ago, it was 56, and I can tell you now that 9 months ago, it was number 197. So that's gone from bottom to top over the last bit. Coal companies making more money? Probably not. Not at all, actually. Probably still doing pretty badly. Computer data storage. Number two. 6 months ago, 190. I mean, are we all storing more stuff on our computers? Who knows? I don't know. But for whatever reason, suddenly the market likes it. So you get the idea of how this continual pass the parcel just goes on and on and on. And that is the secret to understanding whether stocks can go up or down. You know, can't overemphasize this enough. Whatever's unfashionable is going to become fashionable, guaranteed. What's fashionable is going to become unfashionable, guaranteed. Absolutely no doubt in my mind. Just going to look at coal. I'm just going to show you a couple of examples of what can happen, and then show you a stock that when I was running the private fund, when I was doing that consultancy, a stock called NRP, Natural Resources. Just going to click on it. And this stock gone from $200, maybe $300, all the way down to about 5. And on its PE ratio, the stock's gone up to nearly $40 from 8 this year. So it's gone up 4 times. At one point, its PE ratio was 1, which was earlier on in the year. It's now trading at 3. It's been up to 15. So let's just go to our chart. Type in PKD. I have to scroll back a little bit. Sorry, it's gone to foot. Sorry, the scale was wrong on MarketSmith. It's gone from 20 to 4, not 200. But anyway, still a big move. So let's just scroll back, and you're going to see exactly the same pattern. You know? In the price has been stepping down, stepping down, stepping down, stepping down, and then suddenly it switches. Yeah, about March this year, when the stock was trading at about $1.25, $1.30. Now, the other thing I want you to note there is to trade safely never gave a buy signal, which is unfortunate. Would have been very nice if it had done. Just didn't happen. So as people get deeper into this program, I've already gone through this with 2 subscribers this week who have looked at MarketSmith, just to explain that concept. You know, trade safely the system isn't necessarily going to give you a buy, not always. We can't guarantee that. However, there could be other parts in the suite that are going to give you buy signals. So there might just be a time continuation or a UFO or a POPs or something, but it's on something you want to watch. And then once it breaks out, then you can use this time area study in exactly the same way as if you were doing it whether it was a system. So I could turn around, go to trade safely and say, okay, well, put me on a time continuation. So the price rallied, and a time continuation come up. Okay, I'm going to take some profit. What's really interesting there is then you had what's called a time continuation as a continuation. So that little diamond is also where that 6 is. And that said, okay, the trend's ready to restart again. Get involved. So if you get deeper into the studies that build the system, then there's a bit more flexibility. There's also more opportunities. Next one I'm going to show you is back to here. X, US Steel. Now, steel was also at 196. It's currently at number 7. Yeah, it was number 2 6 months ago, so it's been going up for a while. And US Steel is a stock that's gone from like $200 down to 7. Its PE ratio has been between 5 and 236. I'm not actually giving me the current ratio. But again, let's just look at how it set itself up. Now, was US Steel making more money? That's the first thing. And the answer is no. It announced losses in this period that was significantly higher, and the stock went up 200% in that time. Now, as everyone thinks that Trump's going to build infrastructure, there seems to be more of a justification why the share price is going up, because obviously people are going to probably produce more steel. So if I go through it, here we go, I've already marked where we are, and it's exactly the same setup. So this was the sector 197, the most unloved stocks in that sector, and you can see it's been stepping down, and then suddenly everything's below, and then we break out in March, same sort of time, from about $8. It's trading at $20 within well, just 2 or 3 months. There was a sell signal here. The question is, would you take that sell signal? Answer, most definitely not. The reason for that, if a sector is unloved and then starts becoming fashionable, we have absolutely no interest in selling it. So anything that's been in the bottom 10 starts going higher, starts improving, we would never ever take a sell signal. Conversely, it would be the same the other way around. If something had been very fashionable and a sector that was high flying, and then price starts coming down and we get a buy, then we would never be interested in as well. So that's a little bit about sectors and some of the examples of rotation. These are the things I'm looking for. I go through those sectors, I look at the individual stocks and see what's interesting. And I'm just going to share with you one last one that is on my watch list or hit list at the moment, and this is POT, P-O-T. Now what POT is a biggest producer, I think, in the world of fertilizer. So the share price of POT is connected to a certain extent to the share price, not the share price, the commodity price of corn, soybeans, wheat. Generally, there is a correlation there. It's delayed. Now, obviously, I follow soybeans and corn and wheat and trade them actively. And from a fundamental point of view, there's plenty of corn, there's plenty of soybeans. There's nothing on the horizon to say that either of those prices are going to explode on the upside. South American crops going in pretty well. It's a little bit early, so there's no signs of soybeans getting carried away. But what is happening in the stock is we don't necessarily really care. We've been going sideways for a very, very long time. So we had a massive stepping down process, down, and now we're in this sideways. And look at the way time area has condensed. So it's all very, very tight together. We're starting to break up. We've got one final level above $18.42. Start closing above this, and then plenty of energy, lots and lots of room. Where can we go? $28.50, $27, nothing on the other time area. Now, trade safely might give us a signal. Be lovely if it does. It could be that maybe we're going to have to wait to the end of the year before this breaks out, because time and price has to sync up. But this is a stock that is ready. It looks like it's ready to go on a significant upside move, and so that's on my hit list. Right, just going to stop sharing. Right, so it's back to me. So that's it for this week. Statistic-wise, have we got anyone tuning in? Sorry, have we got any big statistics coming out this week? Don't think so. Not really that interested. What we are interested in is whether the industrials can continue higher. Got some things on our watch list. If anyone's got any questions about Market Smith and how those things are looked at fundamentally, then feel free and go through it. It's something we will look at occasionally in future weeks. So thanks very much. Thanks very much for tuning in, and see you next week. Okay, bye bye.